Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading. Gap trading is by far the single best and most consistent day trading strategy available across the markets today. When stocks are gapping higher at the open or lower at the open, usually from an earnings announcement, and we're getting into the heart of earnings season right now. So now's the time when we're going to get bucketfuls of gap trading opportunities each and every day. So look at Signet Jewelers, SIG, on the screen. Here's an example of a gap lower, and the stock closed the prior trading day over $87 a share and opened this morning below $82 a share. What I do in my course is I teach traders how to identify specific areas where stocks will A, be drawn to, and B, find either support or resistance at, in this case it was support, and have a price reaction in the other direction, which is obviously what you're seeing here in Signet. Now, Signet had a slight problem this morning. It opened lower than the 81.75. So folks that have taken my course know exactly what to do with that. What happened was I took a little bit of added or undue, in some cases, risk this morning, and I ended up buying Signet, and I actually caught the trade live, and there's another video on YouTube that you can find, and I'll also link it below this one. But what happened was I was not willing to let the stock go against me any more than the normal stop loss would have been. Speaking of which, let's take a look at the email that went out to subscribers first thing this morning at 9 o'clock in the morning before the market opened by 30 minutes. Here you can see we had 4 possible gap trades on the board today: Bristol Myers, Juniper, Parsley Energy, and Signet Jewelers. Juniper and PE didn't hit their levels, so they're no trades, they're off the board, nothing happened. But Bristol Myers hit its level, as did Signet Jewelers. So on Bristol Myers, I say gap lower, support levels are 57.57 and 56.07, and this is important. Stop and profit target is about 30 to 55 cents. Remember those numbers. On Signet, gap lower, support levels are 81.75 and 79.85. Stop and profit target is about 45 to 70 cents. Let's go back and take a look at SIG one more time. Now, the real point that I wanted to make with Signet Jewelers is not the extra risk that I took on for myself. That's not the point. And I know some other traders that are in my morning gap trading email alerts, the one you just saw, I know some of them took the trade. I heard from them, and good for them. The problem is you got lucky, so beware, because you will get burned sometimes when that happens. But nevertheless, I wasn't going to let it go against me by more than the normal stop loss. The point that I wanted to make is the power of the level. 81.75 identified 30 minutes before the market opened. As you can see, look where the stock went. The stock went as high as over $85 a share. That's a tremendous move off that level. What I wanted to show you is the power of these levels. This gap trading strategy is absolutely the best and single most consistent and profitable day trading strategy I've ever seen across the markets. Let's take a look at the next stock that did hit its level, Bristol Myers. Now, Bristol Myers was a different case. So we have both sides of the spectrum here. We have a stock that hit the level, unfortunately opened below the level, so a lot of traders would have avoided SIG. But here's another one on Bristol Myers where we actually hit the level, bounced up, and then went lower. So therefore, did we get what we were after in the trade? And that's what we're going to analyze right now. So Bristol Myers buy level was 57.57. Stock closed yesterday up about $60. Gapping lower at the open and going lower. So what happened was identified the level of 57.57, and unfortunately it didn't come in there in the first few candles of the day. That's the preferred method. It consolidated over the level by enough to where I was still comfortable taking the trade, but it consolidated above the level and then came into the level later in the session when the larger stock market was selling off. And then what happened was we went down as low as $57.21 on the low, well within the stop loss limitation, and interestingly enough, made a high of $57.87 exactly on the minimum profit target of 30 cents identified in the email that went out to subscribers before the market even opened. Now, I don't expect anybody to have gotten that 30 cents on the button. I didn't get the 30 cents on the button, but the point was that the trade still worked even though it went lower later. It was a smaller scalp trade as opposed to a trade like SIG where it was a huge winner for those that did take the trade, and it would have been an enormous winner had it not opened slightly below the level. But that's just the way trading goes. Sometimes it goes in our favor and sometimes it doesn't. That's just the way it rolls. But I wanted to show you the power of these levels because you can learn how to do this for yourself, and that's what I recommend. Take the course, learn how to trade this strategy for yourself. I provide as much support as you need so that you can come along and get better and better and better as a gap trader. Come over, check out the course. I'm David Frost. Thanks for tuning in, folks.